So hello everyone, welcome to EduTap and welcome to today's session. So first of all, give me a thumbs up if I'm clearly audible and visible. So I hope everything is fine. So today we are going to discuss the most important MCQs for the annual report of RBI, as many of the students they were requesting for me to take a MCQ session on the annual report. So today I have brought this for you. We are going to discuss the important MCQs from the annual report of RBI 2024-25. Okay, so as you know that the annual report of RBI is very important from the examination point of view, and in today's session we are going to discuss the most important MCQs for the annual report of RBI. Okay, so let's see how much you remember. The facts are very important from the examination point of view. So let's see that how much of the facts you have to remember, as well as what are the important facts and how much you actually remember from the annual report of RBI. So let's get started without any delay. But first of all, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so let's get started. First question is in front of you, and we are going to discuss the important questions, the important facts from the annual report of RBI for 2024-25, which is a very important report of the Reserve Bank of India. Okay, so let's start with the first question. The Reserve Bank of India released its annual report for 2024-25, a statutory, that is a legal report of its Central Board of Directors. The report covers the working and function of the Reserve Bank of India for the period of April 2024 to March 2025. Now, which of the following statements is or are correct in regards to the global economy? This is the question. Now read the statements very carefully and try to answer the question. Okay, so the first statement says that as per IMF, the global growth at 3.3% in 2024 was below the historical average of 3.74%. So this statement, is it correct? Yes, it is absolutely correct. Now the second statement is that global inflation is expected to moderate from 5.7% in 2024 to 4.3%. Okay, so this statement is incorrect, and global merchandise trade volume, that is global goods trade volume, expanded by 2.9% in 2024 after contracting by 1% in 2023. Okay, so second and third statements are incorrect, and only the first statement is correct. Okay, so the answer here is D, that is first statement is correct. So here the data points are important, that as per the IMF, the global growth is going to be at 3.3%, is at 3.3% in 2024, which is expected to be 2.8% and in 2025, and in 2026 it is expected to be 3%. Okay, so this is the expectations that have been given by the IMF for 2024, 2025, 2026. Now the global growth in 2024, that is 3.3%, it was below the historical average of 3.7%. Okay, the other important data points I have written here. So global inflation eased to 5.7% in 2024 from 6.6% in 2023, and in 2025 we are expecting it to be around 4.3%. So this is important data point. Global growth and global inflation data is important. Next is global merchandise trade volume expanded by 2.9% in 2024 after contracting by 1% in 2023. Okay, so these are some of the important data points that you have to keep in mind. So I hope you were able to answer the question. Now coming to the second question, try to answer this question. Now this question might seem static, or this question might seem that from where is it asking the question from 2023-24, but actually this question or this was a part of annual report of 2024-25. So even though a question is seemingly static or from like 2 years back or 1 year back and such, but remember that such questions might be from the annual report or from the financial stability report. Okay, so such questions are important. Now Brazil assumed the G20 presidency from India for 2023-24, forming a historic trioga of 3 nations from the global south. Under the overarching theme of building a just world and sustainable planet, which of the 3 priorities were determined by the Brazil's presidency, or what were the 3 key priorities of Brazil's presidency? So try to answer this question. So the first is combating hunger, poverty and inequality. Second was advancing economic, social and environmental sustainability, and the third was reforming the global governance structures. So actually first, second and fourth, these are the 3 key priorities of the Brazil's presidency. So here the answer is 1, 2 and 4, that is E. Yes, very good Guru Raja, very good Meher. I have already taken an annual report session for the annual report of RBI 2024-25. So I have taken a complete session. Do see that session. And today I am taking the MCQ session. Now, if you have seen that complete session, then these MCQs you will be able to do. And here we will only be discussing the MCQs, as I have already taken a complete detailed session for the annual report of RBI 2024-25. So do see that session. Okay. Now here the answer was E. Here we have already discussed that US dollar remained firm through the year. Then we discussed that the Brazil assumed the G20 presidency. India held the G20 presidency until 30 November 2023. Then in G20 Trioca, the Brazil has taken over the presidency in 2024, and the Trioca is comprising of India, Brazil and South Africa. Okay, so this is the Trioca. Now Brazil's presidency prioritized three key areas, that is combating hunger, poverty and inequality, advancing the three dimensions of sustainable development, economic, social and environmental, and reforming global governance structures. Okay, another important point is that pandemic induced fiscal policy measures were taken in which the government expenditure was increased. So during the COVID-19, during the COVID situation, the government expenditure was increased. Okay, in this time period, this put the upward pressure on the global public debt to GDP ratio. So debt started to increase because government had to spend more. In the COVID situation, the government had to provide the health facilities, the government had to provide the ration facilities and such. So government all over the world, around the world, the government had to spend more. So with the more expenditure, the debt of the governments increased, which is expected to approach 100% by 2030. That means debt to GDP ratio will be 100%. So this is the idea. Okay. Now coming to the next question, try to answer this question. Although real GDP growth moderated to dash percentage in 2024-25 as compared with 9.2% a year ago, India remained the fastest growing major economy. Now remember this data point very, very carefully, because this data point has been mentioned in various articles, in various newspapers, in various of the reports. So real GDP growth has moderated to what percent in 2024-25 in India? Now you all should know this data point. Even if you forget other data points, this is something that you should know. Yes, very good, very good. So the answer here is 6.5%. Okay, 6.5%. So although real GDP growth moderated to 6.5% in 2024-25 as compared to 9.2% a year ago, that is in 2023-24, India remained the fastest growing major economy. So answer here is 6.5%. Very good. So here the real GDP growth percentage is very, very important, and the comparison to the previous year is also important. So remember these data points. Now coming to the next one. Coming to the next question, which of the following statements is or are incorrect in regard to the annual report? So aggregate supply measured by gross value added at basic prices expanded. So basically GVA at basic price. We have seen the data for the GDP for 2024-25, it was 6.5%. The GDP at market price. But now the GVA at basic price, what is its value? Or it expanded by what percentage in 2024-25 as compared with 8.6% a year ago? So try to answer that. So it expanded by 6.4%. Okay, the service sector with a share of 64.1% in GVA remained a mainstay of aggregate supply with a growth of 7.5% in 2024-25. That is correct. Service sector has the highest share in the gross value addition. So in the gross value addition, in the total value addition that is happening in the country, the highest share is with the service sector, that is 64.1% of the GVA. Climate Change Performance Index 2025 ranked India among the top 10 high performance for the sixth year in a row since 2020. Okay, so the first statement is wrong because it is 6.4%, not 5.4%, and the second statement is correct, third statement is wrong. So here the incorrect is 1 and 3. So the answer here is C. So the answer here is C. Got it? Any confusion anyone has in this? So aggregate supply measured by real gross value addition at basic prices expanded by 6.4%. This is another important data compared with 8.6% a year ago. Okay. Now here the service sector. So basically the services sector with a share of 64.1% in GVA remained the mainstay of the aggregate supply of the total supply in the country with a growth of 7.5% in 2024-25. Okay. The India has been ranked in among the top 10 high performance for the sixth year in a row since 2020. Now coming to the next question, try to answer this. that headline inflation moderated to an average of dash percentage during 2024-25 from 5.4% in a previous year, largely driven by a moderation in core inflation. Core inflation is your CPI inflation, excluding fuel and food prices. So excluding the volatile prices. So core inflation has reduced, and with that the headline inflation has moderated to an average of 4.6%. Very good. So headline inflation moderated to an average of 4.6% during 2024-25 from 5.4% in the previous year, largely driven by a moderation in core inflation and deflation in fuel prices. Okay. So the answer is here is 4.6%. So here the answer or this data point is important, that 4.6%, this was the headline inflation, CPI inflation during 2024-25. This was lower than the previous year, 5.4%. Okay. Now food inflation remained elevated at 6.7%. So in the CPI inflation or in the headline inflation, the highest weightage is for the food and beverages, right? The highest weightage is given to the food and beverages because CPI inflation is the inflation that is affecting the consumers. So CPI inflation is the inflation that affect the consumers or that affect the consumer products. Okay, so the highest weightage to in the consumer product category, the highest weightage is given to the food and beverages, and the food inflation affects the CPI inflation a lot. So food inflation remained elevated at 6.7% in 2024-25. Okay, so basically headline inflation, retail inflation, it is the CPI inflation. This is the inflation that affects the consumer. This is the inflation that affects the consumers. Okay, so CPI inflation, headline inflation or retail inflation, this is the inflation that affects the consumers. And here we see a basket of goods and services consumed by the consumer. If the price of this basket is increasing, that means the price of food and beverages, clothes, miscellaneous services, footwear, pan, tobacco and intoxicants, fuel, so these are the goods that are consumed by the consumers. These are the consumer goods, we can say. And if the price is increasing of the goods in this basket, then we can say that the inflation is coming for the consumers. There is inflation that is affecting the consumers because the prices of the products consumed by the consumers is increasing. Okay, now food inflation, remember this, remained elevated at 6.7% in 2024-25. Next question, considering the growth inflation dynamics, the Monetary Policy Committee changed the policy stance from withdrawal of accommodation to neutral in October 2024. Subsequently, with the growth inflation dynamics opening up the policy space to support growth, the MPC reduced policy repo rate by 25 basis points to 6.25% in dash. So, see, since February 2023, there was a status quo that was kept. That is, last in February 2023, the repo rate was increased to 6.5%. And since then, the repo rate was kept at 6.5% till when? And when, like basically you have to tell that in which month, in which year the repo rate was decreased after February 2023 increase in the repo rate. So it was in February 2025. Okay, so such kind of question we have seen it in the previous year in phase 1, that such kind of question comes from the Monetary Policy Committee, that the previous years, like the stances that were taken before, so that can be asked. Okay, so you need to have the clarity that in May 2024 the repo rate was increased for the first time. Okay, after a long period, the repo rate was increased in May 2022, and the repo rate was continuously increased till February 2023. February 2023, the last repo rate increased happened, and the repo rate was increased to 6.5%. After that, the repo rate was kept constant till December 2024. And in February 2025, the repo rate started to be decreased. The repo rate started to be decreased. So the repo rate was decreased in February 2025, then in April 2025 and June 2025, the repo rate was decreased. Now, the unemployment rate is at 3.2% in 2023-24. So this is important, that the unemployment rate in the country is 3.2% in 2023-24. Coming to the next question, try to answer this question. So which of the following statements are correct in regard to the data provided in the annual report of RBI? So from 2026-27 onwards, the central government aims to maintain the fiscal deficit on a trajectory that ensures a declining public to debt ratio reaching to 50% by the end March 2023. So it is not 40%, it is 50%. We want the public debt to GDP ratio we want the public debt to GDP ratio to decline to 50% by end March 2023. Okay, this is the idea. Now the central government delivered on its fiscal consolidation commitment. Fiscal consolidation commitment means that we want to reduce the debt in our country. We want to reduce the fiscal deficit in our country. We want to reduce the fiscal deficit. What is fiscal deficit? It is the total expenditure minus total receipts excluding borrowing. So that is fiscal deficit, when the expenditure is more than the receipts excluding borrowing. Okay, so it was said that we want to reduce the fiscal deficit, we want to reduce the borrowing requirement of the country with gross fiscal deficit declining to 4.7% of GDP in 2024-25 from 5.5% of GDP in 2023-24. The Union Budget 2025-26 continued towards fiscal consolidation with target of gross fiscal deficit at 4.4%. So these are the data points from your annual report of RBI 2024-25. These are the data from your Union Budget also. So these are important. So first statement is wrong because it was 50%, not 40. Third statement is also wrong because it was 4.4%, not 3.4%. So correct statement is only 2. Okay. So it is second statement only, that is E. So here you can see that the gross fiscal deficit has declined to 4.7% of the GDP in 2024-25, and it is said that we want further decline in the fiscal deficit. Okay, we further want to have the decline in the fiscal deficit to 4.4% of GDP. So this is the idea. So now here what you have to remember is the fiscal deficit data. The fiscal deficit data is most important that you need to keep in mind. Okay, now moving forward, see the union government fiscal deficit, gross fiscal deficit that is given for the 2025-26 is 4.4% of the GDP. This is the expectation. And we are also seeing that there will be moderation in the revenue expenditure to 11% of the GDP. We want the revenue expenditure to be moderated. See, we want to boost the capital expenditure because with the increase in capital expenditure, there is assets that are created and liabilities that are reduced. Okay, if capital expenditure is increasing, if there is increase in capital expenditure, that leads to increase in asset and decrease in liability. And we want to moderate the revenue expenditure, so that we are doing less revenue expenditure, we are doing less expenditure for the regular requirement, and we are doing more capital expenditure. So there is moderation in revenue expenditure that is being done, and with the moderation in revenue expenditure, the government wants to decrease the gross fiscal deficit to 4.4% of the GDP. Coming to the next question. Major destinations for India's outward FDI. So we are doing the foreign direct investment in other countries, majorly in Singapore, US, UAE, Mauritius and Netherlands. Globally, India was praised at what position in terms of greenfield FDI capital investments, that means new FDI capital investments announced during 2024-25 as per the FDI markets. So try to answer this question, that what was the position of India in terms of greenfield FDI capital investment? It was 4th. Very good. So the answer here is B. So basically, see the BOP data, the balance of payment data that was given in the annual report, that has become obsolete or old because the annual report was released in May, while the BOP data has been released for 2024-25, that is for the yearly. BOP data has been released in around June, July. Okay, so you can understand that the new data has been released by the Reserve Bank of India. RBI has released the updated data in June. So you do not have to remember the BOP data from the annual report. Okay, that has become old. But these are certain things that you need to remember because these are also the yearly data. Okay. So here, just remember this you do not need to remember because this is the old data. The new data has been updated. So this is not something that you need to remember. The new data has been released for the BOP, balance of payment, for like in June it was released, the yearly data was released for 2024-25. So the annual report data has become obsolete. So remember the new BOP data. Okay. Now source country wise inflow of FDI. So we have received the most of the FDI from the Singapore, Mauritius, US, Netherlands and UAE, while major destinations for India's outward FDI were Singapore, US, UAE, Mauritius and Netherlands. Okay. Next is globally, India was placed 4th in terms of greenfield FDI capital investment announced during 2024-25 after the US, France and UK. So US, France and UK and India, these are the top 4 countries in terms of greenfield FDI investment, capital investment. Okay. Coming to the next question. Try to answer this question, that if the value and volume of banknotes in circulation has increased by 6% and 5.6% respectively during 2024-25. So during 2024-25, the share of dash banknotes in value terms and in volume terms constituted the highest share of the total banknotes in circulation. So which banknote is the one that has highest share of the total volume and total value? Is it rupees 100, rupees 200, 500, 10 or 20? So which banknote has the highest share in total volume and total value in the total banknote circulation? So it is rupees 500. So rupees 500 banknotes in value terms 86% and in volume terms 40.9% constituted the highest share of total banknotes in circulation, followed by rupees 10. Got it? It is rupees 500, not rupees 200. Now coming to the next, so here also remember the volume and value. So value and volume of banknotes, this is something important, okay? And the highest share is of rupees 500 followed by rupees 10. Now coming to the next question, that India's payment and settlement system recorded a robust growth of 34.8% in terms of volume and during 2024-25 on top of expansion of 44% in previous year. So basically the India's payment and settlement system recorded a robust growth of 34.8% after growing by 44% in the previous year. So there is still growth that is happening in the India's payment and settlement system by a great percentage. In terms of volume, the UPI transactions had the highest share in the total retail payments during 2024-25. The success of UPI placed India in a leadership position with a share of -% in global real-time payments by volume as per ACAI worldwide 2024. So India has been placed, the UPI placed India in a leadership position with a share of 48.5%, very good, in global real-time payments by volume. Okay, so here the answer is 48.5%. So this is very, very important data that you need to keep in mind. Okay, as well as this data is also important, that the UPI transactions had the highest share in total retail payments of 84%. So UPI transactions had the highest share in the total retail payments by 84%. Now coming to the next question, try to answer this question. These limits you should know by heart because these are important, that in order to encourage wider adoption of UPI, limits were enhanced for the various products of UPI. Which of the following statements are correct in regard to the enhancement of limits? UPI Lite wallet limit has been increased from 500 per transaction to rupees 1000 per transaction. The overall per wallet limit has been increased from rupees 2000 to rupees 5000 to rupees 5,000. Okay, so this is wrong. The first statement is wrong because the UPI Lite limit per transaction has been increased from 500 to 1000 and the wallet limit has been increased to 2000 to 5000. Okay, now under UPI 123 Pay, in consultation with the stakeholders, the per transaction limit was increased to 10,000 from 5,000. So in UPI 123 Pay, the limit has been increased from 5,000 to 10,000. Considering that direct and indirect tax payments are regular, common and high value, the limit for tax payments through UPI was enhanced from 1 lakh to 5 lakh. So second and third statements are correct. Only the first statement was wrong, and that's why the answer here is B. Okay. So the limits are very, very important. Do not forget to remember the limit. This is something that is very, very important. So the limits are important as well as the other initiatives for UPI. This is important from phase 2. The limits are important from phase 1 perspective of RBI grade B examination, from phase 2 perspective of RBI grade B examination, and the other initiatives that is taken, that is important from phase 2 perspective. Now coming to the next question, the economic capital framework requires contingent risk buffer to be maintained in the range of. So Reserve Bank of India has to maintain the contingent risk buffers. They have to maintain the buffers, and it has been said that they can maintain the buffers within the range of 4.5% to 7.5% of the balance of the size of balance sheet. Now the central board approved that the contingent risk buffer may be maintained at % of the size of balance sheet of the RBI for year 2024-25. So what is the size? So the contingent risk buffer to be maintained will be in the range of 4.5% to 7.5%. But for the 2024-25, what is the contingent risk buffer percentage that has been notified? It is 7.5%. Very good. Okay. So basically the economic capital framework requires the contingent risk buffer that has to be maintained in the range of 4.5% to 7.5%. Now for the 2024-25, the contingent risk buffer is being maintained highest, that is 7.5%. Even after maintaining the highest of the contingent risk buffer, still the RBI was able to transfer the surplus to the central government of 2,68,590 crores. So this is the idea that even after maintaining the highest level of contingent risk buffer, RBI was still able to transfer the surplus to the government worth 2,68,590 crores. Okay. This is the idea. Now the size of the balance sheet has increased from the past year by 8.2%. This is also important. Coming to the next question, that the Reserve Bank's balance sheet size has moderated as a percentage of GDP. So the balance sheet has grown, or we can say the size of the balance sheet has increased by 8.2%, but the balance sheet as a percentage of GDP has moderated to what percent? Okay, because GDP, we can say GDP has grown faster. So the Reserve Bank's balance sheet size moderated to what percentage of the GDP as at the end of March 2025 from the 23.5%. So the answer here is very good, 22.8%. Okay, so basically the Reserve Bank balance sheet size has grown by 8.2%, but the balance sheet size as compared to GDP, or we can say the Reserve Bank's balance sheet as a percentage of GDP has declined to 22.8% from 23.5% previously. So answer here is C. So this is something important that you need to remember, as well as the M3. Now the money supply in our country is calculated through M1, M2, M3 or M4. Can anyone tell me that in our country the money supply in our country is calculated through M1, M2, M3 or M4? It's calculated through M3. M3 is the measure of money supply through which the money supply is calculated in our country. The M3 is equal to M1 plus time deposits, okay, with the banking system. So M1 is currency with public plus demand deposits plus other deposits with RBI. So M1 is currency with public, that is the currency that we are holding, plus demand deposits, that is the deposits that we have in the savings account that we can withdraw whenever we want, plus the other deposits. There are certain deposits kept with the RBI. Okay, so that is M1. M1 plus time deposits with the banking system. So we have time deposits in the banking system. We have fixed deposits, recurring deposits that are kept with the bank for a time period till maturity. So these are the time deposits that are kept with the bank for a time period. So M1 plus time deposit, this is M3. So M3 recorded a growth of 9.6%. That means money supply has grown by 9.6% as on March 2025 as compared with 11.2% of the growth in the money supply a year ago. This is the idea. Okay. Now bank group wise, if we see group wise bank data, public sector banks registered higher credit growth than that of private sector banks. So credit growth is higher in the public sector banks as compared to private sector banks, okay, for 2024-25 or at the end of March 2025. Now coming to this question, keeping in view the rise in agricultural input cost and overall inflation, the limit for collateral free agricultural loans was raised from 1.6 lakh to what? Lakh per borrower in December 2024. So this limit was raised and this is mentioned in the annual report. So this is important. So here the answer is that the limit for the collateral free. See, basically the farmers, they can take the collateral free. They do not need to provide any collateral. So they can take collateral free agricultural loans, and the collateral free agricultural loans limit was 1.6 lakh before. Now it has been increased to, very good, it has been increased to 2 lakh. This is not only for the agricultural loans but also for the allied activities. Okay. So the limit has been increased from 1.6 lakh to 2 lakh. Now all of these points have been discussed in the complete annual report session that I have already taken. So do see, you just have to type in YouTube annual report of RBI 2024-25 EduTap and you will get the complete session of annual report that I have taken. Comprehensive detailed session of annual report I have already taken. So that's why I am not discussing each and every point, because it has already been discussed in the complete report. Here we are only discussing the MCQs. Okay. Now coming to the next question, and this is the last second question. After this, I will give you one homework question. Okay. So now this was mentioned in the annual report, as well as this is quite in news recently, because the AU Small Finance Bank has got the in principle approval from RBI to become the universal bank. So a small finance bank can voluntarily transition into universal bank after taking approval from the Reserve Bank of India, but the small finance bank must be following certain criteria. Okay, now which of these criteria are correct in consideration for transitioning from small finance bank to universal bank? So first of all, small finance bank must have a minimum net worth of 1000 crores. Correct. An eligible small finance bank shall have the net profits in each of the last 2 financial years, not 5. Small finance bank shares should have been listed on a recognized stock exchange. Correct. So first is correct, third is correct. Small finance bank having gross non-performing asset of 3% or less than 3%, net non-performing asset of equal to 1% or less than 1% in the last 2 financial years. Okay, so here the statement is wrong because it is not 2%, it is 1%. So first statement and third statement are correct, and that's why the answer here is B. So I hope this is very much clear that the small finance bank must have a minimum net worth of 1000 crores, okay, and it should have the gross non-performing asset of less than or equal to 3% and net non-performing asset of less than or equal to 1%. Okay, so first and third statements are correct, second and fourth are wrong. So here in the annual report, this was mentioned, and we have discussed this in the session itself, in the annual report session, that the small finance banks are required to have a minimum net worth of 1000 crores. The CRAR requirement is 15%. Net profits in the preceding 2 financial years and gross non-performing asset at less than or equal to 3% and net non-performing asset at less than or equal to 1%. Okay, as well as the guidelines on settlement of dues of borrowers. So this also you can read, and this has been discussed in my comprehensive session of annual report. Now this is a homework question. You have to tell me in the comment section below that out of 15 how many marks you have got. Okay, as well as the annual report is data heavy. So I have told you some important data that you need to remember. Do see, if you have not seen the annual report comprehensive session, do see that session and then try the MCQs again and then see how much marks you are getting, how much you are able to retain. So it's not like that, okay, you have seen the session and you have got, let's say, 6 marks out of 15. Now you have to go through the annual report session, or you have to go through the annual report summary that is provided by your course. Let's say you do not want to see the YouTube session, so read the summary of the annual report provided by your course and then try the MCQs again and see, at least try to get 12 out of 15 at least. Okay, so that is the target that you should have, and this is the homework question. I hope you will be able to answer the question. There was a fintech repository that was launched by the RBI in on May 28, 2024, and this was for the fintech entities. With this, there was another repository that the RBI launched. Now what was the name of that repository? That you have to tell me. Okay, now this is the homework question that you have to tell. So in the comment section, do tell me that out of 15 how much marks you have got. Comment section, do tell me out of 15 how much marks you have got, as well as if you have not got good marks, let's say you are getting only less than 10. If you have got less than 10, so do see the annual report session again, or do go through your summary report, annual report summary that is provided by your course, by your whichever institution you have joined, and after that do try the MCQs again. At least try to get 12 out of 15. Okay, now these are the series that are currently running for your RBI grade B examination. The government schemes which are very important from the examination point of view, it happens on Monday, Wednesday and Friday 10:30 a.m. Finance 360, it happens on Tuesday, Thursday and Saturday at 10 a.m. Okay, then there is your Perspective 360 that happens on Monday, Wednesday, Friday 5 p.m. Okay, for your answer writing practice, and you have the daily current affairs on Tuesday, Thursday and Saturday 5 p.m. Now my time might be changed from 10 a.m. to 10:30 a.m. for coming week, because I'm having the morning sessions for some batch from 7 a.m. to 9:30 a.m. Okay, so I might not be able to take the session directly at 10 a.m. So because the sessions might extend to 10 also, so my timing might be shifted from 10 a.m. to 10:30 a.m. This will be informed and the session timing will be notified. Okay, so the Finance 360-degree sessions, they usually happen at 10 a.m. but till 24 September I have classes in a batch from 7 a.m. onwards, so that's why your classes might be from 10:30 a.m. onwards, so that you also do not miss anything, and I'm able to revise the PPT before starting the session. Okay, so the sessions might like Finance 360 sessions might be shifted to 10:30 a.m. I hope it is fine. Okay, Is this clear? Okay, thank you everyone. Thank you for joining. I hope you enjoyed the session, and I will request you that do give the MCQs again, do try the MCQs again to see that how much you are able to retain. Okay, this session was for you to see that how much you actually retain if you have already studied the annual report. Okay, and I have marked some important data points that you have to keep in mind from the examination perspective. Remember that the balance of payment new data has been released, so focus on the new data. That is the idea. So this is it. Thank you everyone. Thank you for joining. So merchandise trade related data, is it important? See, global data is important. Okay, and if there is a new the global data is important, so that you have to remember. Okay, so this is it. If you have any query, you can write in the comment section below. So thank you everyone.